from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
Tonight, the countdown to the president's tariff deadline.
The trade team has been working around the clock to try to be in correspondence with as many countries as possible. But if they haven't heard from us yet, they will in the form of a letter or an executive order by midnight tonight.
Donald Trump unleashing a series of trade deals and demands on the eve of his Friday deadline just hours from now, giving Mexico a 90-day reprieve from higher tariffs, imposing a 25% levy on goods from India, gearing up now to sign an executive order, and threatening Canada's deal over its move to recognize a Palestinian state.
The clock is ticking down to midnight when those tariffs are set to kick in, with the president delivering a concise, all-caps message. The August 1st deadline is the August 1st deadline and will not be extended. Republican Senator Ted Cruz of Texas and Democratic Congresswoman Suzan DelBene of Washington will both join us with reaction.
Plus, the big tech earnings came out just after the close from Amazon and Apple as they rush to capitalize on the AI boom.
And the SpaceX launch that wasn't. The last-minute scrapping of the planned crewed SpaceX liftoff to the International Space Station. What happened and what it means for future attempts coming up.
We begin tonight, though, at the White House and the latest flurry of trade announcements the administration has shared ahead of the deadline that kicks off in just 7 hours from now. Bloomberg's Skylar Woodhouse has more live from the West Wing tonight. Skylar, welcome back, of course, to Balance of Power. Do we have all the deals we're going to get?
Well, time is ticking here at the White House, and that is currently the question of, I guess you could say, the hour on when can we expect to see that executive order, that the president is supposed to sign ahead of the deadline. The evening is winding down, and it could be, an 11th hour executive order that comes across, but we are on high alert for any letters or executive orders that the president could be signing.
Well, and especially given the president and other White House officials' repeated insistence that the August 1st deadline would not be budging, yet Mexico was able to secure a 90-day extension. Skylar, is there a chance that any other countries are going to be able to get that treatment?
Look, I think we'll have to just wait and see what happens. I mean, I think what we've seen from President Trump throughout this tariff saga is, he says one thing, it's sort of walked back a little bit, and we see these negotiations just sort of going back and forth. So only time will tell if, countries get an exact rate or if they get an extension. And that's something certainly that only the president knows right now.
We've got the countdown clock up for our listeners on Bloomberg Radio, about 7 hours away, just shy of 7 hours. The president has made clear, Skylar, we should remind ourselves that this isn't the end of the story, right? There is still a welcome sign up for countries who want to make a phone call and engage in negotiations.
Absolutely. And I think that's something, the president wants to see. He wants countries to, call him or come, to the U.S. and visit the White House and have these talks, have these negotiations with him. So even though, these tariffs, are set to go into place tomorrow, it still raises questions on what kind of wiggle room comes after August 1st, and if there's, maybe going to be more negotiations and more rates that are set as countries continue to have these conversations.
Well, and Skylar, there's also a massive legal question as to whether or not the president's authority that he's chosen to use to implement these tariffs, the International Economic Emergency Powers Act, IEPA, is going to stand. An appeals court heard arguments both ways today. Is there a chance that the White House is going to have to abandon these shortly after implementing them if the courts say so?
No, that's a great question, Kaylee. Something I was trying to process myself today, knowing what's going on in the courts right now. So I think we'll have to sort of wait and see how exactly the White House moves forward, with these tariff, with the executive order and everything we're expecting tonight, to see how the courts react or what that means with the current ruling that is going through the courts right now.
All right, Bloomberg's Skylar Woodhouse live from the White House for us. Thank you so much. And today on the early edition of Balance of Power, we spoke with Ron Kirk, the former U.S. trade representative in the Obama administration, who told us this about how markets are viewing the president's trade moves.
The one reason I think you've seen the markets not overreact to this is they've become a little bit dependent on the belief that when he gets up to the point of knowing the economic harm these tariffs would inflict, he has found a way to back away. He did it with China, did it with Mexico today. We've done it with Japan. So we'll have to see.
Now, the markets, of course, had to digest all of the trade news along with an uptick in the Fed's preferred inflation gauge today. And helping us unpack that in today's Power Moves is Bloomberg's Romaine Bostick, who's joining us live from World Headquarters in New York.
And the market has been on edge with regards to this August 1st deadline, Kelly. But part of the buffer here for asset prices has been the idea that most of the companies that have outsized exposure to any sort of tariff or trade policy have so far found a way to mitigate that. You saw that in big moves earlier today out of a lot of companies, including eBay, which closed at a record high. Roku, which just reported earnings after the bell. They did mention tariffs. They did say it did hurt device sales. But again, a lot of these companies are well diversified and they have ways to pick up the slack elsewhere. Of course, policies coming out of Washington still has an impact and investors are still hanging on every word. You saw that play out in the pharmaceutical sector today. As a group, they had one of their worst days going back at least to mid-May. And that was after we had news here that the Trump administration sending out letters here to the pharmaceutical companies with regards to potential tariffs on that front, should you not find maybe a little bit more of a way to reshore some of the manufacturing and sourcing of materials in that space. Also on the policy front, and this just came in the after-hours trade, you saw a pop in the shares of Fannie Mae and Freddie Mac. Remember them? These are the GSEs, government-sponsored entities that control more than half of the mortgages in the United States, reporting here that after meetings with the heads of Bank of America, JP Morgan, and Goldman Sachs, that Trump has been asking those CEOs to come up with a plan for a path forward for Fannie and Freddie that maybe could unleash them from the conservatorship that they've been in since the global financial crisis.
Always great to have you, Romaine. Bloomberg's Romaine Bostick at World Headquarters in New York with a lot to cover every night these days. As we turn back now to the trade news coming from the White House, Wall Street is paying close attention to this. The president set to sign an executive order codifying existing trade deals ahead of tonight's midnight deadline after giving Mexico a 90-day pause on increased tariffs as these negotiations continue. Joining us now live from Capitol Hill for a lot more on this, Republican Senator Ted Cruz of Texas, who, of course, chairs the Senate Commerce Committee. Senator, welcome back to Bloomberg TV and radio. I guess I should say Happy Liberation Day, the sequel. Here we are. It takes effect at midnight tonight, as you well know. And people should know that Texas has a lot at stake here. The largest exporter of any state in the country. I'm not sure everyone's aware of that. And the second largest importer of products from overseas. A 15% levy based on the number crunching at Bloomberg would find that those imports could be as much as $60 billion more in duties. With this said, how does this tariff policy help the state of Texas?
Well, listen, I think President Trump has demonstrated the effectiveness of tariffs as leverage to open foreign markets. I'll tell you, within the Trump administration, I think there are two camps. There's one camp that is urging the president use the threat of tariffs to persuade our trading partners to lower the tariffs they put on American goods and to lift non-tariff barriers. That camp, Scott Bessent, the Treasury Secretary, is in that camp. I'm emphatically in that camp, urging the president. This is an incredible opportunity to expand the ability of Texas and the entire country to export. There is another camp in the administration that doesn't view tariffs as a means to an end, doesn't view them as a way to incentivize other countries lowering their tariffs, but rather sees them as a permanent feature of our economic system, wants high tariffs in perpetuity. I think that position is wrong. I think that position would be really harmful, but I'm gratified because the president has predominantly been listening to the former camp rather than the latter. I hope he continues to.
Well, and of course, the president says tariffs do not constitute his economic policy alone. There is also, of course, his tax policy, which was advanced through the One Big Beautiful Bill Act. And last you joined us, Senator, we talked about one of your contributions to that legislation, the Trump savings accounts, which were your brainchild. I'd like to ask you about that, given the Treasury Secretary Scott Bessent yesterday said, and I quote, that those accounts are a backdoor for privatizing Social Security. Was that your intention?
Well, listen, what they are is an avenue for all of our kids to invest and save. And so the Trump accounts, and they'll be launched next year on July 4th, on the 250th anniversary of the birthday of our country. Every child in America will get a personal investment account. Newborn children will get it seeded with $1,000. And parents and family and employers can contribute up to $5,000 a year in a tax-advantaged account, and that money will be invested in the S&P 500. And the advantages of that are twofold. Number one, every child in America will now benefit from the miracle of compound growth. And I think this was Scott Bessent's point. So let's take a little girl that's born next year. She has the account opened for her. She has $1,000 automatically put into it. And let's say each year parents or family or employer puts $5,000 a year in that account. If you assume the historical rate of growth of the S&P 500, which is 7%, that account, that little girl, by the time she is 18 years old, will have $170,000 in that account. And if she keeps putting $5,000 a year, by the time she is 35, she will have $700,000 in that account. And that's every kid. That's not just the kids of rich parents. That is really transformational. I think that was Secretary Besson's point, which is if you have a new generation where when she is 70, when she's retired and on Social Security, if she's got hundreds of thousands or even millions invested in the market, she will be able to retire with much greater financial security than she would have otherwise. That's an incredible win for everyone.
Well, while that did make it into the reconciliation bill, Senator, something else you were pushing for did not get included in that package, and that's stopping the Fed's authority to pay interest on bank reserves. You are now pushing a separate piece of legislation trying to achieve that same objective, which I know you've argued could save $1 trillion over a decade. The Fed chair, Jerome Powell, says the suggestion that this would save money is an illusion and that actually it could spur volatility in financial markets. How do you guarantee that this doesn't disrupt short-end rates?
Well, let's look at a little bit of history. The Fed was created in 1913, and from 1913 until 2007, the Fed paid zero, not a penny in interest on reserves. It was actually illegal for it to pay interest. In 2008, in the midst of the great financial crisis, Congress, for the first time, gave it the ability to pay interest on reserves. And at the time, it was a very low interest rate. It was 25 basis points, so it was very small. What happened under Joe Biden is the interest the Fed began paying skyrocketed. So last year, in 2024, the Fed paid $186 billion in interest on reserves. That is massive, and it's projected over the next decade to pay $1.1 trillion. It's paying right now at a rate of 4.4%. The result of that is the banks have parked $3.4 trillion in capital with the Fed, because essentially what this is a zero-risk savings account for banks, and they're just getting paid. Right now, the taxpayers are giving hundreds of billions of dollars to giant banks. And not only that, more than 40% of that money is being paid to foreign banks. So it's not even American banks, because the European Central Bank is only paying 2.2%. The Fed is paying 4.4%. So American taxpayers are paying foreign banks. This doesn't make any sense. And so the legislation I introduced, called the FAIR Act, returns the Fed to the way it operated for a century until 2008, which is not paying interest on reserves. That would save a lot of money, but it would do something else also. It would lower interest rates, because banks, instead of parking money at the Fed, they would take some of that money to buy Treasury notes. That would drive down the interest rates, which would mean for consumers at home buying a new car, buying a new house, their interest rates would go down as well. I think this is a win-win. And it's not surprising to me that the chairman of the Fed doesn't want to end it. And it's also not surprising to me that giant banks like getting billions and billions of dollars from the taxpayers. But I think it's time for this corporate welfare to be put to an end.
Senator Cruz, I want to ask you about something that's happening in your state, not in your legislative body, but the state legislature is working to redraw congressional districts in Texas. Yeah. That the president says will generate 5 new Republican seats that may well help Republicans hold their majority in the House. I talked about this with a Republican colleague of yours in the House today, Congresswoman Nicole Malliotakis of New York, about the idea of gerrymandering happening not only in Texas, but maybe in other states, with Republicans and Democrats eyeing this same thing. Here was her response. We'll have you tell us what you think. Listen.
As somebody who is a victim of gerrymandering, I don't care if it's the Republicans or the Democrats that are doing it. It's wrong, and it should not be done. We have to make sure people are electing their representatives, and to try to alter a map to tilt the scale is wrong. Whether it's Republicans or Democrats, gerrymandering is wrong. It should not be done. It's corrupt. And we have to make these maps as fair and balanced and competitive as possible. And perhaps we need to move toward computer-generated maps or just court independently drawn maps.
Senator, you hear the arguments. Of course, a lot of people blame gerrymandering for the partisan politics that we have in this country. What part of what the Congresswoman said is not correct?
Listen, number one, I think it's a good thing that the Texas legislature is moving forward with redistricting. As you noted, the map they put out is designed to elect an additional 5 Republicans to Congress. That could well be the difference between maintaining a Republican majority in the House for the next 4 years or not. And if you look at all the incredible victories we've won in the last 6 months, whether securing the border and an historic investment into building the wall and securing the border, or the biggest tax cut of our lifetimes, all of that happened because we have a Republican House, a Republican Senate, and a Republican president. And so I'm grateful for anything that increases the chances of good policies, low taxes, low regulations that produce jobs and prosperity and abundance. Let me say, secondly, what the Texas legislature did is produced a map that better reflects the values of Texas. Texas is a conservative state. It makes sense that we elect a congressional delegation that reflects those values. And I got to say, when it comes to gerrymandering, I'm in particular amused at the Democrats who are clutching their pearls, because the Democrats have always been much, much more ruthless in gerrymandering. I'll give you an example. The state of Massachusetts. About 35% of Massachusetts votes Republican. About 60 to 65% votes Democrat. Do you know what percent of Massachusetts congressional delegation is Republican?
I believe it's 0. Yeah.
They drew it, so not a single Republican is elected.
We also saw the redistricting of Barney Frank's seat in Massachusetts, and he found himself in a position where he couldn't even win re-election in his own district. So a lot of people wonder, Congressman, if this is in fact a good thing, especially if California follows Texas and Gavin Newsom tries to rewrite the California map. Doesn't this turn into a spiral? Where does it lead?
Well, but it already has. Look, California, the overwhelming majority of the seats are Democrats as well. They've drawn those districts there that it elects just a handful of Republicans from California. I mean, that's part of the irony. These Democrats going, oh, this is terrible, while they're doing it egregiously. They want Republicans to draw maps that elect a bunch of Democrats, and then the Democrats draw a map that elect a bunch of Democrats. And that doesn't make any sense. Look, this map is designed. Texas should have a congressional delegation that represents our values. The beauty of drawing lines is I'm elected statewide. I'm quite confident my lines aren't going to change. They're not going to move the Red River. And so I'm proud to represent all 31 million Texans.
All right. Republican Senator representing Texas, Ted Cruz, thank you so much for joining us. And we'll continue this conversation on redistricting ahead. The chairwoman of the DCCC, Congresswoman Suzan DelBene of Washington, will join us next on Balance of Power on Bloomberg TV and radio.
Republican politicians want to choose their voters. We're going to do everything possible to support the Texas legislators as they consider the best ways to push back. It's an all-hands-on-deck moment, and all options should be on the table to protect the people of Texas.
That was House Minority Leader Hakeem Jeffries down in Texas today discussing the Democrats' plans to fight the current redistricting efforts in the Lone Star State that are designed to create 5 new Republican seats. And joining us now for more here on Balance of Power on Bloomberg TV and radio is Democratic Congresswoman Suzan DelBene of Washington, the chair of the Democratic Congressional Campaign Committee. Congresswoman, welcome back to Bloomberg. As we consider the prospect of 5 more Republican seats in Texas, where are you looking to gain seats by changing what maps?
Well, first, let's be clear. This isn't something that the people of Texas has asked for. This is an order from Donald Trump to the governor and to the Texas legislature to change the maps so that they could pick up more seats. Republicans are running scared. They aren't willing to go and talk to voters and think that they will win based on policy. They think the only way they can win is to rig the system. And that's absolutely what this is about. We're going to do everything we can to make sure that the people of Texas are aware of what's happening. People hate this. They want to elect the people who represent them, but people need to be aware of what's happening. I hope that folks will see how dangerous this is, taking away the rights of people. But if they go down this path, they should be careful what they ask for, because they will definitely create districts that are competitive, and we're going to compete in every single one of those. And Republicans will lose their seats. But we are also going to fight across the country to make sure that we're standing up for rights. And there's a lot at stake here. So no doubt you've heard from others across the country that this impacts them too, and that they are looking to respond.
Well, are Republicans making a dangerous calculation by assuming that Hispanic voters in Texas will, in fact, vote for Republican candidates when these districts are redrawn? And either way, is California the best bet to answer what's happening in Texas?
First of all, I think Republicans are assuming that they can't win just by talking to voters and talking about their policies or their vision of the future. It's pretty clear they don't really have one. They've been raising costs for families across the country. People are feeling the pain of that. They won't do town halls. So they're in a tough position right now because they are not meeting the needs of the American people, standing up for them. They are blindly loyal to Donald Trump. So this is the path that they are going down. Again, not a strong path to be going down in terms of serving the American people, but also we are not going to stand by. We absolutely respond, and we are going to respond, and voters will respond too, because I think it will open up opportunities for us. When you start moving those lines around, that creates new districts that we can compete in.
Well, but when we consider that response, Congresswoman, to get back to Joe's question, is California your best option?
Well, I think folks across the country are looking. This makes a big difference to people to see folks try to control the House of Representatives, not by the will of the people, by changing lines. But we absolutely are going to see folks respond because there's so much at stake. This is about health care for millions of people across the country. It's about building an economy that works for everyone, not just for the wealthy and the well-connected. It's about having a Congress that works for the people, not is blindly loyal to Donald Trump.
I want to ask you about what happens when House lawmakers return from the August recess, Congresswoman. Whether we're talking to Brendan Boyle or Elizabeth Warren on this program the last couple of days, it's very clear that Democrats are angry, feel burned about the rescissions package that was passed, never mind the president's big, beautiful bill, and are not going to be working with Republicans to craft a budget for the next fiscal year. Are you preparing for a shutdown?
Well, it's terrible. We should be very involved in the appropriations process, and the appropriations process should be driving how funds get spent in the federal government. Instead, we have an administration that thinks that they don't have to listen to Congress, and we have Republicans in charge of the House and the Senate who blindly go along with that. So it is incredibly challenging going forward to make sure that there's work in a bipartisan way to stand up for the decisions that Congress makes. If Republicans aren't willing to do that, then they are putting federal funding at risk. We're going to continue to stand up for the American people, to stand up for strong appropriations bill, bipartisan legislation. It's unclear that Republicans are willing to do that.
Federal funding at risk. Democratic Congresswoman Suzan DelBene of Washington, we thank you so much for being with us and bringing your view from the DCCC. Coming up, President Trump unleashing a series of tariff announcements ahead of tomorrow's deadline. We'll talk it out with Daniel Hornung, former deputy director of the National Economic Council. It's coming up next on Balance of Power, only on Bloomberg TV and radio.
Clearly, the companies that are succeeding in the markets today and seeing investor dollars flow into them are those that have a clear AI strategy.
These companies think that the winners will be those that have the talent, those that have the data, and those that have the capacity. And so they're willing to spend whatever it takes.
We're seeing a race for talent, and that race for talent is really second to none that I've ever really seen.
Voices from earlier today on Bloomberg surveillance. Thanks for joining us on Balance of Power here on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lines in Washington. Among the companies racing to embrace AI, Apple and Amazon both releasing earnings after the bell here, and their stocks are traveling in very different directions. More power moves now with Ed Ludlow, the host of Bloomberg Tech, live from San Francisco. Ed, we throw two more logs on the high-tech fires here, and a headline that just popped from Apple is pretty fascinating here. The forecast is being celebrated on Wall Street as well as San Francisco, isn't it?
I think that's it, because what they're saying is that revenue in the September quarter is going to grow by a percentage mid to high single digits. That's a pretty good thing. We also got a lot more data on tariff impact. So what was interesting is in the fiscal third quarter, which was the June quarter gone, they disclosed a tariff impact of $800 million, which for a company that just booked $89 billion of revenue doesn't seem like that much, but it's even less than the $900 million they previous guided. Here's the thing. Tariffs in the next quarter, September, will have a $1.1 billion impact, so a few $100 million more. And what the executives were talking about tracks with the reporting we've done on this program, the choppy nature of policy and tariffs, because all Tim Cook and Kevin Parekh, the CFO, can do at Apple is tell us what they're modeling for based on tariff policy at any given time. Found that really interesting, but you're right, the big move higher in shares after hours in the last few moments was their discussion of where they stand at their projections of growth for the balance of the next 3 months.
Well, while it is a move higher for Apple, Ed, it is not so for Amazon. Is this primarily an AWS problem or a wider outlook problem?
Much more simple story, AWS problem. Amazon books so much revenue, vast majority of it comes from Amazon.com. But the vast majority of operating income comes from AWS, in which it is the #1 player in cloud. And part of the story is that the operating income guide for the current period, the next fiscal quarter they'll give us, was basically at the midpoint of the range below consensus. But you have to put it into the context of what we heard last night from Microsoft and Meta and Alphabet 1 week ago. Microsoft and Alphabet in particular signal to us that the investments they've made in capital expenditures into data center capacity and AI capability is translating to revenue growth. Amazon is an absolute giant in that field, but there's no AI story there that's yet showing up as profit, at least, or revenue for AWS. And so, investors got used to a pretty good thing in the last 24 hours, and Amazon kind of brought them back down to earth.
All right, Ed Ludlow, the host of Bloomberg Tech, thank you so much for joining us. Now, as companies like Apple, as Ed just told us, are disclosing how tariffs are impacting their earnings, importers, custom brokers, and the logistics industry are preparing for a deluge of fine print on tariffs before tomorrow, when President Trump has pledged higher country-specific duties that are set to go into effect about 6.5 hours from now. And for the details, we turn now to Boston, to Bloomberg's Laura Curtis. So, Laura, when we consider that the president says this deadline at midnight is a real deadline, this is something firm, are importers treating it as such, or is there a lot more information they need and questions as to whether or not they can rely on that information?
Well, there's a lot left for them to find out today. We actually only just heard from the White House a few hours ago with confirmation that there would be any official documentation coming out today before the midnight deadline. So White House Press Secretary Caroline Leavitt said this afternoon that Trump would in fact sign some executive orders setting the tariff rate on various different countries before the deadline, but there's still a lot of outstanding problems for customs brokers who will need to be filing things tomorrow. There are issues with things like transshipment, loopholes where importers could potentially bring goods in from China via a third country, how they would even enforce that. All of these details need specific tariff codes that would go into the booking platform that they'll start using as soon as tomorrow.
Laura, thank you so much. Bloomberg's Laura Curtis with us live from Boston. For more insight into this impending trade deadline, now only hours off, we turn to Daniel Hornung, senior fellow at MIT, former deputy director of the National Economic Council in the Biden administration. It's great to have you with us on Bloomberg TV and radio. If the weather was a bit better, we might have been able to crane our heads around that window behind Laura and see the cranes in Southie and along the Boston Harbor. Once these tariffs take effect, will those cranes be less busy than they are today?
Well, it's good to be with you. You know, there's no question there's going to be an adjustment period, whatever happens. As you saw in the previous segment, it's kind of unclear what the tariff rates will be tomorrow on any given country. But as you just take a step back and think about the moment of uncertainty that we're in right now, you know, it is pretty stunning the degree of whiplash we've seen just on even the average effective tariff rate going from, you know, below 2 when President Trump came to office, a Liberation Day high of near 30%, then down to the single digits, now back up again to 18% or so, with the risks, as you noted, certainly to the upside of where that average effective tariff rate goes in the next few days. And, you know, at the end of the day, that puts both the economic growth side and the inflation side in a precarious position, and further, I think, complicates the picture, not just for the Fed, but for businesses and actors throughout the economy.
But on the Fed, Daniel, we heard from the chairman, Jerome Powell, yesterday that it's unknown, obviously, what ultimately the inflationary impact of the tariffs in aggregate will be. But he did suggest that he thinks it could just be a one-time increase in prices because the Fed will use its tools, its interest rate mechanism, to guarantee that it doesn't spiral into persistent inflation. But can the Fed do that if we're seeing staggered implementation of tariffs? Won't that guarantee that you are seeing kind of intermittent changes in prices?
Well, it's a great question. You know, in the first place, what does a one-time price level adjustment mean? It doesn't mean 1 month. It means over the course of a longer period of time, something more like a year, if you look back, for example, to the 2018-2019 tariff episode. And then, as you note, if what you're doing is every month or 2 months or every week adjusting those tariff rates, it takes even longer. You couple that with the fact that this was largely telegraphed, and so you saw a large uptick in imports before the tariffs went into effect. I think what you're likely to see is inflation data ticking higher for several months. On the one hand, that means it takes somewhat longer to show up in the data in a world where markets and consumers and the media are highly attuned to day-to-day movements. But on the other hand, you know, from a political perspective, it means this issue of high prices is going to be with the president and with the administration, not for a few weeks or a few months, but likely well into 2026 and potentially beyond.
I want to ask you what happens after the 1st of August, because the White House has signaled that countries can still engage on trade. We spoke on the early edition of Balance of Power today with Ron Kirk, the former U.S. trade representative in the Obama administration. Here's what he had to say about this timeline.
The level of tariffs that the president is imposing, frankly, just don't relate to the harm that he says he's trying to cure. All of us expect that if these countries can somehow get into the queue, if their president can call and, in our president's view, bend the knee or say the magic words, then relief will be coming. But the most powerful factor in this, frankly, has been the market.
Daniel, how should we be thinking about this after tomorrow? We could still be getting Truth Social posts about trade deals. We could be hearing about trade meetings. Certainly we'll continue with China. And this is a market that in many cases was more concerned with certainty than it was the actual tariff levels themselves, suggesting that the corrosive effect of this policy may not end tomorrow.
Well, Joe, if you're to bet on one thing, it's certainly that we will continue to get Truth Social posts and policy changes as we go. There's no question about that. And I think you're right that the market has largely looked through the kind of short-term, near-term policy impact on the economy and on markets. I do think that as you start to think about the administration's overall strategic objective, is it more tariff revenue? It seems like probably not, because the tax cuts are cutting in the other direction. Is it onshoring? That's difficult in an environment with little business certainty. Is it being tough on China? That seems somewhat unlikely given that there are higher tariff rates on other countries like Brazil. So I do think that as the macro data starts to show more impacts of tariffs, both on the inflation side and on the economic activity side, the pressure will grow on the administration to more clearly state what their objective is in this trade war. Because at this point, it's very difficult for markets, for businesses, for anybody really to understand what that real objective is.
Well, and when we consider that economic activity side you're referring to, Daniel, and specifically hiring and firing decisions that employers might be making as they consider their costs of inputs, knowing we have a jobs report coming up tomorrow, when do you expect that this is going to more materially impact the labor market?
Well, we've got that key report tomorrow. We are already starting to see it pretty materially show up in the inflation report we saw this week. We're starting to see it show up on the economic activity side in terms of growth. Over the first half of the year, we saw growth well below trend at 1.2%. Consumer spending, really the engine of the economy that drives so much hiring decisions, that's also relatively weak over the first half of the year. And so there's been a lot of talk about kind of this binary question of recession or no recession, but we're already seeing a weakening that's likely to lead to less hiring and an uptick in the unemployment rate in the months ahead. And the question, of course, will just be from a policy perspective on trade, from a policy perspective on the Fed, and from other aspects in the economy, whether that weakening can level off or whether it continues to worsen.
Well, less hiring, of course, would not jive with the view of the White House that is talking about reshoring entire industries here in the United States. Daniel, as you look ahead here beyond August 1st, is China the most important deal this White House can close?
Well, with the EU behind us and Mexico on a extension, I think there's no question that China is the most important player here. And it's also worth, I think, thinking about the somewhat of a bind that puts the administration in. On the one hand, the average effective tariff rate is increasingly driven by those three countries, or the two countries and the EU. But on the other hand, there is a real need, I think, for the administration politically to continue to signal that they are acting aggressively with respect to China. And I think that will just be a difficult situation for them to navigate in the coming weeks. You've seen already that the tariff rate on countries like Brazil have gone much higher than the rate on China. And so obviously markets and import-sensitive businesses will be watching very closely to see where things land with China before that August 12th deadline, and then potentially if that one is extended as well.
Daniel Hornung, senior fellow at MIT and former deputy director of the National Economic Council in the Biden administration. Thank you so much. And coming up, we'll continue our conversation on the midnight trade deadline that's just over 6 hours away and the political implications when we assemble our political panel. It's next on Balance of Power on Bloomberg TV and radio.
It's Balance of Power on Bloomberg TV and radio alongside Kaylee Lyons. I'm Joe Matthew. Thanks for joining us. More on the pending tariff deadline, now less than 6.5 hours away, with our political panel. But first, a look at some of the other news that we're following in today's Bloomberg Power Brief. The White House says Mideast envoy Steve Witkoff and U.S. Ambassador to Israel Mike Huckabee will travel to Gaza tomorrow to inspect food distribution centers and develop a plan to better distribute aid. It comes amid growing global criticism of the humanitarian crisis that is unfolding in the region. Earlier today, Witkoff met with Israeli Prime Minister Benjamin Netanyahu following efforts to facilitate a peace agreement between Israel and Hamas that stalled last week. This morning, the president posting to social media, quote, "The fastest way to end the humanitarian crisis in Gaza is for Hamas to surrender and release the hostages," unquote.
Thousands gathered along the streets of New York City today to mourn NYPD officer Didarul Islam, who died when a gunman opened fire at a Manhattan skyscraper on Monday. The Bangladesh-born 36-year-old married father of two with a third child on the way was working a private security detail at the building when he and three other people were killed. The AP reports during a memorial service, dignitaries and members of the New York Bangladeshi community paid tribute to the fallen officer that emphasized the importance he placed on his family, background, and service to the city.
And SpaceX halted the launch of a crew to the International Space Station about a minute before liftoff earlier today, citing unfavorable weather conditions. If you're with us on Bloomberg TV, you see the clouds. A Falcon 9 rocket topped with a Dragon capsule is now slated to try again as early as tomorrow morning at 11:43 a.m. Eastern Time from the Kennedy Space Center in Florida.
Of course, we have our eye on a different time. It's midnight, which we're quickly approaching today, as the president is set to implement higher tariffs on a number of our trading partners as we arrive at Friday, August 1st. And joining us now with more on that story is this evening's political panel, Lonnie Chen, fellow in the American Public Policy Studies at the Hoover Institution and Republican strategist, alongside Democratic strategist Kristen Hahn, partner at Rock Solutions. Welcome to both of you. Obviously, we are assuming this midnight deadline is a real thing because the White House has insisted, indeed it is, that this is not something that will budge. And yet, Lonnie, today, the president got on the phone with the president of Mexico and came off that phone call and said they have a 90-day extension. Is that not budging? Is he not undermining himself?
I think that we have to hold all these deadlines very loosely. And I think that's the thing we've seen so far in this presidency. And the reality is that the president is not immune to what the markets are telling him about how people feel about the impact of tariffs. We saw it after Liberation Day. We'll see what happens. Obviously, the market had a rough end today. We'll see what happens tomorrow if that ends up changing the opinion of the president. And then there's this question of, are there countries that come to him and say, no, we want to do a deal. We really just need more time. And are they going to get a Mexico-style reprieve? So that's the kind of question we want to ask with big trading partners like India, for example, where I think the negotiations been a little rougher than people would have expected. So I think there's a lot of play in the joints here still, but there's no question the president's gotten us all used to a different level of tariff and to be comfortable with that baseline level going into the August 1st deadline.
It's National Avocado Day. If you're in the mood for tacos, Kristen, I'm just wondering, with everything that we just heard, if we're going to see more reprieves or if you believe that Truth Social post. As you can see, the date is not moving, according to Donald Trump.
Well, first of all, I'm from Texas, so I am all about avocados every day.
Brilliant.
No, I mean, I think Lonnie's right. I mean, you shouldn't believe what you hear come out of this president's mouth. I mean, he's threatening. He takes things back. He says he can do 200, deals all at one time. Then he says there's no way you can do that. And it's the uncertainty that I at least hear from a lot of the people that I work with, a lot of publicly traded companies that they're concerned with, and they can't make decisions because they don't know what he's going to do. So, I guess we'll see. I would assume that if
what's worse than the uncertainty or the tariffs themselves?
Well, it depends on who you're talking to. If you're talking to businesses, I mean, they are not making decisions right now.
Yeah.
I'm seeing this. Whereas before they would be able to make, 5, 10, 15-year plans, and they're just kind of on hold. If you're talking about the prices of things, it's the everyday consumer. And that is going to have a massive impact on how they view things, not just how they vote, but, everyday pocketbook issues. And, that's not political. That's just, how people feel every day.
Well, and all of this might depend on who the president is talking to as well. What voices are in his ear? That's actually something that Republican Senator Ted Cruz of Kristen's home state of Texas had discussed with us earlier this hour here on Balance of Power.
Listen, I think President Trump has demonstrated the effectiveness of tariffs as leverage to open foreign markets. I'll tell you, within the Trump administration, I think there are two camps. There's one camp that is urging the president use the threat of tariffs to persuade our trading partners to lower the tariffs they put on American goods and to lift non-tariff barriers. That camp, Scott Bessent, the Treasury Secretary, is in that camp. I'm emphatically in that camp, urging the president. This is an incredible opportunity to expand the ability of Texas and the entire country to export.
So maybe you've got Scott Bessent on one side, you've got the likes of Peter Navarro on another. Lonnie, are we getting a sense of who within those various camps in this administration is the winning voice here?
Well, let's hope it's Secretary Bessent. And I think Senator Cruz's assessment is spot on, that there is this argument that the president's used this leverage, for example, with the European Union, to cut a deal or a set of agreements that would appear to be quite favorable in terms of U.S. market access. I think the question becomes, which is it, the devil or the angel that ends up winning out? And I do think, based on what I've heard from within the administration, that Secretary Bessent is a very important figure in the negotiations with China, in the important negotiations that do remain. So I'm hopeful, at least, that the scenario that Senator Cruz paints is indeed the one we're going to see out of the president.
Sounds like the Saturday Night Live cold open with the angel and the devil on President's shoulders here. You may have just written something. Lonnie, how do Democrats message against this then? We were joined by Senator Jeanne Shaheen last evening, right before she marched to the Senate floor to call for unanimous consent on a bill that would call into question the IEEPA authorization of these tariffs. It went nowhere. Not a single Republican voted for it.
Yeah, I mean, the Democrats don't have control of either chamber or the White House. And so the question becomes, how do you message it? How do you message it? And who are you messaging to? Are you messaging to the average voter? And that's difficult because, when these tariffs haven't taken place, haven't been implemented, people feel things when they feel it in their pocketbooks or when their health care is implemented. And so, when you're talking in these terms, we know these things are coming down the pike. We know that they will have impacts on the lives of everyday Americans. But when you're talking about it, it's very difficult. So, I think, the Democratic Party, and I think both parties kind of we don't want to get wrapped up in all the things that Donald Trump is throwing at us every day. We're going to indict former President Obama. We're going to do this. We're going to do that. We would be well to remember that people vote because of how they're doing. The economy, if they're able to put food on the table for their family, and just keep a laser focus on that, particularly headed into next year.
Well, if it really ultimately is about the cost people face, that obviously has many different facets. It's not just food, it's things like healthcare, the medications they need as well. The president today sent a letter to 17 different pharmaceutical CEOs, Lonnie, saying that basically they have 60 days to lower drug prices. How do you view that move?
Well, I mean, this has been a signature issue for the president. He sees this as an opportunity to drive the conversation around lowering drug costs. You're absolutely right that for most Americans, how they view this question of health care costs is how much they're paying at the pharmacy counter. And so this is an issue the president believes he's got political salience on. It's complicated, though. The reality is these pharmaceutical supply chains are complicated. They're multinational. There's a ton of innovation going on in America that we don't want to discourage. And the concern, I think, is that when the president pursues policies like the most favored nation policy he's been pursuing, it could dampen that innovation that we so need in this industry.
That is a big concern, but this is a Democratic issue. Lowering drug prices, are you on board with this?
I think this is such a complicated issue, and everybody wants to lower drug prices, Republicans and Democrats. And I actually agree with what you just said. You have to take the private sector and the pharmaceutical. We've done Center Forward is an organization that engages Democrats and Republicans, did a study on this and focus groups, and realized that people actually, they want the government and private sector to work together, to come together on this issue.
Not sure if that's the approach this administration is taking, but we're going to find out in a couple of weeks' time. Lonnie Chen, Kristen Hahn, great panel. Many thanks for the insights and analysis. And we invite our viewers and listeners to check out the Washington Edition newsletter. Find it on the terminal and online.
And we'll see you back here tomorrow for the Friday edition of Balance of Power. It's deadline day, August 1st. Tariffs go into effect at midnight. We'll have more tomorrow on Bloomberg TV and radio.